Hello everyone. Good morning. Hope you had a very good weekend. Welcome to this new video. This is going to be a different kind of video. I'm going to explain how I personally use standard deviations. Now, this is how I use them. I do not give a single fuck about other people saying I'm wrong. So, let's get into the chart. I'm going to start with a daily example just on the higher time frame, and then I've got a couple rules for the lower time frame I use myself. So high time frame, you can see we have bullish high time frame order flow all the way. We're in a bit of a range here, but if you can see here, we have very smooth highs there, and we just took out this swing low here. So we took it out, and then we see displacement, right? Shifting structure here. At this moment, I can start to pull my standard deviations, like right here. So, as a general rule of thumb, you would want to look for retracement reversal around 2 and 2.5, and then a reversal around the 4, because that's a max expansion. Silver bullets usually happen around the 1 and the 1.5. If I find it there, let me just flick it on. So, when we see a retrace from the 2 and 2.5, you would want to look for a retrace into this area here, right? So that's the rule of thumb. So we can see this is the main target for now. Just going to reprice a bit. See a pullback into this breaker block plus this volume imbalance, which you see holding price up very well right now. You can see expansion out of there, shifting this high. VI again. Support for higher prices. Let me give that a different color. Support here again. See some more upside. We didn't reach it yet. Keep that in mind. Didn't reach it yet. Okay, so here we go. So what I usually do when it's high time frame projections, I mark out the 2, 2.5, and then the 50%. Like this. Let me just grab my CE. So beautiful like this, right? As you can see, we tap the CE and we kind of reject already today. So now we want to look for a retracement into an area here, into a discount array here, right? What do we have in form of discount array around this level? We've got these relative equal lows here. So sell side liquidity pool here, right? So we can maybe look for a turtle soup of this low into higher prices. So I want to see a retracement there. You can see how beautiful the mid-range is holding. You can see that's true support and resistance, right? So here we see a retrace. This should be an IO fed towards lower. So you can see we went lower to the equal lows. And then what happens here? After we take the equal lows out, right, we displace again, shifting structure above this high. So at this point, I can pull another projection leg from this low to this high, because this is a significant swing, just like this swing was significant, right? This is significant as well. So right here, I start to pull my standard deviations. And what catches my eye here is look how close the 4 are together. The 4 standard deviations from both legs, right? Look how close. It's almost picture perfect, right? So now we do the same thing again for this leg, right? See a retracement here into optimal trade entry of this leg. And mark it out. Here we go. Just move it a bit to the right. Another expansion. Fair value gap plus an order block here. Expansion higher. Expansion higher. Now we reach a 2 and 2.5 again. So I'm going to mark out my range again. Right here. Like that. And then of course the 50% too. Here we go. Bang. So we would like to see a retrace here, or to the 1 and 1.5 area. So that's in around this here, this block. So what do we have? We have this big buy side imbalance, sell side inefficiency. We have a smaller one here, and then we have this propulsion block here. or order block, whatever you want to call it. So you see the 50% holding really nice. See essentially a reaction here, but quickly smash down again. So here we go down and we tap the wick of this order block, which is your first point of interest, right? Let me make that red. So ideally this holds and we don't see a close below the rejection block. Ideally. See another expansion. Here we finally expand higher, right? And the area I'm looking is the 4 standard deviations. I'll just mark out this one, but they're basically the same, right? When they overlap in 2 different legs like this, you could say it's a market maker buy model. It's really powerful when they're really in a close vicinity, right? See expansion, or expansion on this breaker block here. You see the wick here. You see the step here, really clean. Then we see, now we reach the 4, right, with big expansion candles, right? So at this moment, the buy side of the curve could be completed and you could look for the sell side to begin. But of course, we're not going to short blindly, so I'm going to wait at least for a daily change in a state of delivery, right? And that would be this candle's body low, like right here. When we see a close below that, I can comfortably look for shorts. So we reach the 4 here, overlapping. And we immediately smash down. Change in state of delivery here. So now I expect a retrace to around this area and then a sell-off. So the sell side of the curve could be in, right? So sell side liquidity would be this low here. That would be your final target, of course. So let's see what happens. We have an FEG with this order block, which is really powerful, like this. See, we tap into it and look how we smash down, right? Look the power in that. That's from the order block. It's a 200 pip move, right? Then we see a retrace here to this order block, this series of up close candles. Make that pink. I'm running out of colors here, man. So see another expansion down. We see a raid on the swing high into this daily fair value gap. Mark that out in black. So you can see clearly we're on sell side of the curve right now, right? And this is our objective. This is our main objective, right here. This is the low of May. So see more downside here. A bit of a consolidation here, and then we take a short-term high out here. Then we come back up into this redelivered rebalanced here. I'll give that orange. And then we should see downside again out of here. So we immediately test this order block here as well, because we ran to a PD array, displacement, change the state of delivery, test, downside, right? Fair value gap again. More downside, expansion, and finally target is completed, right? So that's how I use them on higher time frame, right? So the key is to really focus on the importance of the leg, right? You can put standard deviations anywhere, like here. Like these overlap with these ones, so 4 overlap with 2 and 2.5, that's good. You could do that. But like, don't just go into random highs and lows and put a standard deviation prediction like here. You could put one here as well. But like, it's not really relevant, right? So just focus on the main ones that actually take liquidity, and where we see displacement is the key thing in all of this, right? We see displacement here. We see 400 pip move above a daily short-term high. It shows you willingness in price to go higher. Same thing here. We take these equal lows in bullish order flow. So bullish order flow, you always want to be buying below lows, right? So we come down and then we see displacement. Again, 230 pip move above daily short-term high. And then we just see discount being fully respected until we reach the 4 standard deviations. And then we can potentially look at sell side of the curve. And then when we change the state of delivery, when we have that here, you can see every premium array being respected. until all the way the cell model is completed, right? Original consolidation here, reaccumulation, SMR, low risk cell, distribution 1, and silver bullet here, right? So that's the essence. So now I explained high time frame, right? So you know the basics about them now and how to use them. But now I'm just gonna give you a final rule of thumb when using intraday standard deviations, right? So high time frame order flow, let's say it's bearish, right? If higher time frame order flow is bearish and you are using bullish intra-week or intraday legs, look for reversals around the 2 and 2.5, because we are not likely to expand all the way to the 4 when high time frame order flow is bullish, right? When high time frame order flow is bearish. So when using bullish predictions, look for reversal around 2 and 2.5. When using bearish intraday projections paired with high time frame order flow being bearish, you can always look at the 4 and look at the 2 and 2.5 for your retrace to enter towards the 4. And that's the rule of thumb. If you write that down and you just go a bit of front testing in the charts, you don't base your whole model around them. It's used for added confluence, like SMT, like those things. So it can be really helpful to know when to take profit, when to expect a retrace, when you know price is overextended. So that's why I made this video. I hope you enjoyed. And if you want any more of these educational stuff, please do let me know, because I enjoy making them. And yeah, safe trading, and see you later.